Hey, I'm John Stevenson, the Guaranteed Retirement Guy, and today we're going to be talking about annuity IRA withdrawals and the options you have, and also the rules. So you've got an annuity inside of an IRA, or maybe you're thinking about purchasing an annuity with your IRA, and you need to know the rules for taking that money out. Okay, let's talk about penalties. Let's talk about avoiding them. And really, it's important because a lot of times when people want to retire early, they're asking me, "Hey, John, I'd like to take money out of this early. How can I do this?" And even with non-qualified annuities, when you put money into it, from non-qualified funds, the IRS still has rules. And if you take it out too soon, they'll still penalize you. So it's the same with IRA annuities. If you've got an annuity and you're taking that money and you're putting it into an annuity, an IRA annuity, you are still subject to the 59.5 rule, which states that if you take money out early before 59.5, they're going to penalize you 10%. Plus, you got the income tax on top of that. So you might be 58 years old and you start taking income or you start taking withdrawals from your annuity inside of your IRA, and you're going to get that 10% tax penalty. And depending on what your tax bracket is, maybe it's another 15% or 20%. Okay, now you're talking 25, 30% in taxes. Okay, that's not that great when you want to get as much net as you possibly can. So in order to avoid that, as far as the ordinary tax side, you can convert it to a Roth, of course, and you will avoid that. But you will never avoid the 10% tax penalty in a Roth or a traditional IRA if you decide to take money out of it before you're 59.5. Okay? The rules are the same, whether it's an IRA with stocks or bonds or whatever inside of it. The rules are the same with that as it is with an IRA with an annuity inside of it. You are still subject to that tax penalty if you take it out before you're 59.5. Okay. Now, a lot of annuities will allow you a free withdrawal of 10%, up to 10% every single year without any penalty from them. But it doesn't exempt you from the 10% penalty that the IRS will put on you if you take it out before the 59.5. Okay. So remember that. Now, let's talk about RMDs. You might have money inside of an IRA that you have an annuity contract that's going to give you a lot of guaranteed income, and you want to wait as long as you possibly can, especially with these annuities that provide a lot of growth for income, like the income benefit that you get from the income rider. They can be pretty substantial, and they can give you a ton of income. And so that's very valuable when you're thinking about investing into an annuity early, knowing that you're going to take income payments, maybe 10 years from now. Even 5 years from now. It makes a big difference. And so the thing you have to remember, though, is what if your goal is to take income after you're 73? Well, the annuity is still inside of an IRA, which means it's still subject to the IRS's rules that, you have to start taking this out by the time you're 73. Now, for me, current tax laws is that I can wait till I'm 75. Okay, but with the new change, most retirees now are required to take the RMD by the time they are 73 years old. So make sure you remember that, because when you're going to take money out of your annuity, you don't want to be paying penalties too early, and you also want to make sure that you don't wait to take RMDs, because they'll penalize you for that, unless of course you decide to convert it to a Roth IRA. If you convert it to a Roth IRA, there are no RMDs. So, of course, you got to pay taxes and deal with all of that, and sometimes it's not a good idea to do it, but it will allow you to defer taking that guaranteed income past your RMD age. So something to think about. They do have their rules. They do have their restrictions. You have to think about that when you invest money into an IRA. And then, of course, if you put an annuity inside of that IRA, it's going to give you guaranteed income. It's going to give you a lot of growth. It'll give you the market protection, but it's still subject to the laws that the IRS has and the restrictions that an IRA has. Okay? So we can talk about that. If you have more questions and you're thinking about maybe converting some of your funds from your IRA into an annuity, it's going to transfer from that IRA to another IRA with an annuity contract inside of it. And if you want some more information on that and you want to look at top annuities, then it might make sense to book a call with me. You notice that there is a link below this video, as in all my videos, and it goes directly to my calendar. Okay? go ahead and book a call. I'll answer all your questions concerning your annuity options, and if it's an IRA or 401k or any other type of qualified plan. We can talk about all the rules and restrictions and the things that you need to think about and plan for so that you can get the most from your money, but also not be penalized. And we don't want you to have to pay any fees that you don't have to. All right. So I hope that helps. Appreciate you watching, and we will see you next time.